Hello, everybody, and welcome into today's afternoon live stream here on Wednesday, October 15th, 1:31 p.m. Eastern in the afternoon. And boy, has the market given us a lot to speak about over the past week. If you have been paying attention, Friday, massive liquidations across the board, huge selling. Monday, full rebound. Tuesday, oh no, it's back. It's going down. Wednesday, we're back to the upside. This is a kangaroo market if I've ever seen one. Super excited to be joined by Ethan Hertzfeld again from the New York Stock Exchange, from their ETF team. Thank you for coming back onto the Wolf Show. I feel like there's a ton to discuss here.
Of course, Gav. Always happy to be here and appreciate you guys having me and excited to dive in.
Yes, amazing. My pleasure. Let's talk about it. So first off, you have a little bit more of that inside view, from the exchange. And we just have seen so much money moving all over the place. And it wasn't just in stocks, ETFs as well caught the upside and the downside as well throughout. So I'd love to hear from you, just like, what are you hearing on the floor? What are you seeing when you talk with money managers and investors?
Yeah, I think there's a few different things. The first of which is not a whole lot of people really know what's going on. You like to think that markets are pretty rational. But there is this saying in markets can remain irrational longer than you can remain solvent, which kind of, you can have all the right answers, think you're doing all the right things, and still end up in the wrong position at the wrong time. And I think when we look at what's going on, the volatility recently, everyone thinks they know what the market's reaction is going to be based on whatever the next Trump comments are going to be, or the government shutting down, or disagreements over X, Y, and Z. But I think what we've seen in markets kind of demonstrates that no one really knows. Like on Friday, right? You see this massive drawdown, pretty much everything, right, including crypto. I know my crypto portfolio got crushed.
Oh, yeah.
Crushed recently, which was a little painful. But you see this massive drawdown across all sectors, and then Monday, really no groundbreaking news, we'll say, but then markets rebound basically back to where they were last week. So I think there's a lot of uncertainty. No one really knows what's going on, as much as a lot of people are going to look around and think that they do, or hope that they do. I think ultimately no one really has the answers right now.
Yes. So I want to just go through a couple of things here. I'm going to screen share and pull up. I'm actually going to show my timeline for a second in a tweet that I put out that a lot of people engaged with yesterday. 857 likes on this one, and get your thoughts. And I'll show you the quote tweet that I did on it as well, and how much you could speak to this. So I said, we really are just one post away from both S&P 500 7,000 and S&P 500 5,000. And a lot of people seem to agree with that. And then, as you can see, this is a current depiction of where our stock market lies. So what do you think? I don't feel like we've ever, at least in my, and I haven't been investing for forever, let's say a decade, experience. It's basically just been Trump that this has happened with. I don't remember, Obama's tweets moving the market like this, or, Biden really, like, I remember one time Biden was like, maybe we should legalize weed, and like all the weed stocks flew. Like, that's the only time that I remember it happening. But this is like every day you trade off of not technical analysis anymore, but Donald Trump tweets about soybeans. Like, what's happening?
Yeah, I think we're in an unprecedented time, both in a few different ways. One, in terms of access to information, right? Obviously, that's prevalent a lot through social media. That you go back to like Obama's terms in like 2008, right? Isn't as much of a thing. Obviously, it exists, but not the way it does today. And two is a little bit of the volatility of the people that are tweeting these things, making decisions. And I don't want it to be political commentary on whether I agree or disagree with Donald Trump by any means. But he's a volatile person, love him or hate him, right? He's kind of all over the place. You see the US, China trade war tensions, and I think that's been a driver of some of the uncertainty in markets and what's going on in industrials and things like that specifically. But it's truly something we've never seen before, in terms of you're refreshing your Twitter feed or X feed instead of, right, looking into the recent earnings from any of these companies. That earnings is something else we can get into. The whole AI space is just mind-boggling to me, as they pass around the same bag of money from one firm to another. But I think, the access to information is one thing, and the ability to act on it is the other thing. There's a lot more people interested in investing than there ever has been on an individual level. And
Right.
also the ability via all these platforms that are out there now. I mean, you go back 10 years, right? You don't, I guess Robinhood exists, but it's really small. It's in its infancy stages. And all these other platforms that are there today don't really exist yet. So the ability to act on that information is significantly different than I think it was when you go back 5 or 10 years.
Yeah, it's a great point. Commission-free trading, access. A lot more people just maybe having capital now than they did back then, right? Just more money in general. Shout out to the money printer. So that's just happened as well. So yeah, let's take a look a little bit deeper here for a second into the ETF Central website and just give an eye on, what's kind of trending right now and where things are happening. So I like to go in here. I like to go over to the segments right here, which I encourage people to check out. And then to scroll down, you can see the featured ones. You can see segments on the move here. So you have best performance, worst performance over the past week. Let's take a look at this. So I think there's a couple themes here which you could speak to from the ETFs. So alternative energy and metals have really been moving. Now, metals X gold is very interesting here because you have gold, which is up 56%, but metals X gold is up 76% year to date, and even up more than gold in the past week. Alternative energy, I believe that this is being driven by the conversations with China because we get a lot of our rare earth minerals and energy pieces from there. So I think that that's somewhat what's driving this, but also I think that there's been a big push for nuclear. But yeah, I'd love to just kind of hear your thoughts on when you look at this, starting with the best performance. We'll talk about worst in a second.
Yeah.
What's standing out to you?
Yeah, so you pointed out the metals X gold, and I was watching this interesting video the other day. I can't remember who posted it, but they were talking about the value of silver versus gold and historically what those rates have been. And it's been right pretty consistent around X number of ounces of silver for 1 ounce of gold. And over the last call it 10 years, 5 to 10 years, we've really seen that gap widen where it costs a lot more silver to buy 1 ounce of gold. Um, and you're kind of seeing a reversal of this in real time as you point this out, as people kind of realize a lot of, well, so while silver is one of the most abundant, right, metals on planet Earth, there's also a whole lot of things that we need silver for. So you think about electric vehicles, there's silver in those. You start thinking about like computer chips or GPUs, or you start talking about solar panels and a push to renewable energy sources. There's a lot of silver in those. So I think the reason you're seeing gold's performing well, other metals are performing better, is because the gap between gold and those other metals has widened significantly over the last 5 to 10 years. And there's a little bit of a correction as some of those other metals become increasingly important in manufacturing processes and perception of where the market's going or where our future's going in terms of renewable energy sources and things that are reliant heavily on other metals. So that's like the one thing I'd point out there.
Yeah, I think it's a really good point. To me, I did a live stream yesterday with Peter Schiff. He's incredibly bullish on gold, right? And uh, there's two other areas that he really pointed out. So one is these other precious metals. So I believe that what's the one that's up the most this year? It's not platinum, but it might be. It's something around there. There's another one that's just absolutely skyrocketed. So actually, let me do this. So live platinum prices and all of these things, by the way, everybody, you can get exposure to through ETFs these days. Pretty easy to find it.
I am seeing
So
platinum number one, Gav.
yeah, okay,
About
cool.
50% in the first half of 2025. Gold was 26, silver 25, palladium 21.
Yeah, so platinum up 84.2% year to date now, and it's pretty interesting to see because when you zoom out a little bit further, which it's not letting me do on Perplexity Finance here, but something to keep an eye on. I just think that it's super interesting where this is going. So this was one other item we was pointing out, which was you said like silver, platinum. Do you, by the way, have any like favorite like general ETFs for this area that just kind of cover like the precious metals as a whole?
So one that's obviously very popular, I assume people are pretty familiar with, is going to be like GLD.
But that's just
Right?
gold.
There's a lot of gold.
Yeah.
We mean precious metals, like broadly speaking.
Yeah, like how do I
Um,
just get like gold, silver, platinum, palladium like in like one area?
Probably something like an XME, which is the Spider Metals and Mining ETF, I think it's called. Yeah, okay. So it's pretty sizable at 3.5 billion. So no liquidity concerns or
Holy
anything like
cow! See,
that
this is
there.
what I'm talking about right here.
Over the last little while, obviously you look kind of first half of the year is kind of stagnant, mixed inflows and outflows, but then it's really taken off over the last 4 to 5 months, I would call it, kind of from May onwards.
Yeah, so this is like a perfect example of what we're talking about here today. I'm just going to show people now. I've always been a huge proponent of follow the big money, right? And big money right now, look at this. The biggest inflows of the year are coming in. I mean, came in yesterday.
Over the last 30 days, it's brought in over 400 million.
Yeah, I mean, it's crazy, but you
Uh,
can see it's
uh,
just like,
Another one in that kind of same sphere is REMX. That's a
yeah.
Van Eck rare earth metals one. I think that's brought in somewhere around 300 million over the last 30 days. Yeah,
Yeah, this one's up
274.
100% as well. So this is exactly what I was talking about. I mean, you could see this one. People have just been stacking this all year. Money just continuing to come in and just move to the upside, right? Like this is just a thing of beauty. And you're just seeing people continue to buy, right? Like you're just not having down days here. You can see the inflows just continue. And it's the same thing here where I was showing it. You could see the inflows just really stacking up here and rising even as we hit all-time highs on some of these things, or at least 52-week highs. People are continuing to buy. You could see this as well on one of the others that I was just showing. So metals X gold as well. You can see it's not, as of a huge, and you did have a couple of down days here, but still you're continuing to push even at the highs. And so that's something that I just see is happening here across the board. I'm getting really big into the gold area, but I'm realizing that there's a lot of opportunity in different areas. So honestly, some good ones there. I appreciate you adding this. So what was that Van Eck one again?
REMX.
REMX. I'm going to add this to my watch list, which nice little handy dandy feature that I encourage people to do. You can just add things to your watch list. So REMX. I got to do it like this. REMX. And then you said XME.
Yeah.
And then what was the other one there?
Which one were you talking about?
There was another rare, or maybe it was those two. Maybe it was those two.
There's those two. You were, I think, looking at the X Gold one as well.
Yeah. What was the ticker for that?
X Gold is. That's a great question. Let me pull it up if I can find it.
Yeah, it's okay. I mean, I can
can't
find it if I just go back. X Gold right here. This is Metals X Gold. This is
I was
the
gonna say that might be a sector.
got it. Okay, cool.
There
So
will
this is
be.
just a segment.
I don't know an X Gold ticker off the top of my
Okay,
head.
so it's an aggregate data of 10
there are
funds here.
some.
Cool. But yeah, like what I'm saying is I've just found that sometimes it's not just taking the one single strategy. So it's like, hey, I could buy GLD, right? And shout out to GLD. You're going to be up a good amount this year, right? You're going to be up like 55% year to date. But then when you zoom out and you go to one of these others where you have, like you said, a strategic metals, which I'm sure is going to hold gold probably in this, right? I would assume it's
I
inside
would
of here or
imagine,
something.
yeah.
Yeah, I don't know. There's a bunch of
Is
stuff
this
there.
this might be a gold miners ETF,
MPP.
which is going to
Yeah.
own a lot of the corporations.
So that's the other area that I was going to go was it's actually the
Buy
gold miners
buy the
that
shovels, not the or sell the
exactly.
shovels, not the land. Don't go
Yeah, so
mining for the
Peter
gold.
Schiff was telling me like 50% of their portfolios in miners, and the reason is if you have a miner and the price of gold goes up 1%, but your cost to mine gold don't go up, your benefit goes up sometimes 2 to 10%. He
Yep,
said if the price of gold goes up 10%, you could have miners that their profit goes up 100% because their costs are not increasing. And that's why probably the best
exactly.
performing ETF of the year is
If you look up,
probably GDXU, I would assume.
I was going to say GDX or GDXU, yeah.
Oh, sorry, not this one's the inverse one. What's the
GDX and GDXJ are the two gold miners in ETFs.
GDXU is inverse?
GDX and GDX
Why is this
J,
being
the
inverse leverage?
3X.
Okay, no, I have the correct one. It's GDXU. I don't know why I guess it was saying inverse leveraged ETN, but this is a 3X leveraged gold mining ETN, and it's up 800% almost year to date.
Yeah, on the topic of 3x ETFs,
Yeah.
um,
The
there's a
5X?
whole lot of them filed. I'm sure you're aware or been paying attention to, but I know people watching and listening might not. There's a whole slew over the last 2 weeks, let's call it, of 3x and now 5x ETFs that have been filed for. Um,
Yeah.
I think for those that aren't aware, the reason that when you look at GDXU, it's in an ETN structure is because 3x has kind of been pushed out of the ETF structure. The SEC doesn't really allow it anymore. The products that are 3x that are out there are allowed because they're kind of grandfathered in. They existed before the SEC decided that 3x might be a little too high of leverage for average investors. So as they got rid of that, only a few still remain. But with the SEC shut down, as part of this government shutdown, if you file for an ETF, the SEC has a certain amount of time, I believe it's 75 days, to basically come back and deny that application. If they don't deny it, it automatically becomes effective. So basically, I think people are hoping that the government's going to stay shut down for longer than 75 days. And as a result, these 3 and 5x are automatically going to become effective.
Yes, yes. So there's a lot of danger to this, and I'll just elaborate a little bit. So, yeah, volatility shares applied for 5x ETFs. The danger here is if your ETF, if the stock goes down 20% in one day. So this just recently happened, I believe, with the Granite Shares AMD Inverse Fund.
Yep.
AMD got a deal with OpenAI,
OpenAI.
and they went up 40% at one point in the day. Because they were up 40%, the inverse triple leverage was down over 100%, which there is no underneath. They got completely liquidated. The entire fund is gone. There was no money returned
So
because,
there's one example, and why I always think too people need to be careful with levered products is it's not exactly, I don't want to say it's not a fair game, because at the end of the day it's structured in a way that's fair, but the math isn't in your favor, if that
yeah,
makes sense. Because right, say your ETF you buy, it's a 2x ETF, and it goes down 20% one day. Now it's at $80, right? In order to get back to 100, $20 of $80 is 25%. So it loses 10%. The double of that's 20%. So you're down to 80. Even if it gains 10% back the next day and you gain 20%, you're still not back to even on it. So it's
yeah,
kind of, if you're in these things long term or buying them on a frequent basis, you're kind of going to see decay over time unless the market significantly outperforms in terms of days that outperform versus days that
yeah,
underperform.
yeah. I think this hedge eye graphic sums it up pretty well. They did a good job with that. You said 75 days. I saw this from Hedge Eye today. They said, FYI, during a government shutdown, the issuer can allow for automatic effectiveness after 20 days, but bears all legal risk. Are you familiar with that?
Not familiar with that. I should find out though, certainly. If there was something 20-day related, I would have to imagine. And the hedge eye people are good people.
Yeah,
John's
yeah.
awesome. But as far as I'm aware, there's nothing 20 days specific, but I could also be totally off base there. I'm not a regulatory expert at the exchange. I've picked up quite a few things over the years, but by no means am I the expert on the SEC's way that they work.
Yeah, it's pretty crazy. Anyway, beware of those, careful. Just completely know that, like, if you're in a 5X and the stock moves 20% a day, you could completely lose all of your funds and you will get nothing back. And there is no tomorrow to come back from it. So just be aware of that. Um, I have a lot of usage for like double leveraged. I found it works well for me. I trade around, events and things like that with it. But a lot harder to get wiped out on double leverage. Moves of 50% in stocks are extremely rare. Moves of 30% are becoming far less rare on a day-to-day basis, especially in a market like this. To be honest, in a market like this, you probably want to be very careful with the amount of capital that you put into anything leveraged at any time. All right, real quick, looking at worst performance over the 1 week and also outflows and inflows, I thought this was really curious. So, worst performance over the 1 week is cryptocurrency at about 10%. But most inflows,
I have to say
cryptocurrency is three.
I'm shocked it's only 10%.
Yeah, I know. Well, it got a rebound, and also
Exactly.
they might be including the miners in here, and
They
crypto
very well
miners.
could be.
basically took no downside. If you look at, iron all-time highs today, CIFR basically all-time highs.
Yeah.
All of these are just like absolutely pushing. So that's probably why. I mean, look, it's the number one ETF. This ETF, are you familiar with it? WGMI?
Yeah, slightly.
Yeah,
Not
actual
super familiar,
insanity. I
but
mean,
have
this
paid
is
attention. It's caught my eye.
yeah, this ETF in the last 3 months is up 150%. It is crazy. The flows are super interesting. So this basically, I mean, correct me if I'm wrong, but people are like getting out of this. They're taking gains.
So when I'm looking at flows, I'm seeing a totally different graph.
Right. So that's what was curious to me was that well,
Everything
this is for
everything on my
specifically
screen is
yeah,
very
here.
green, taking inflows.
Specific to WGMI?
Oh, what time period are you looking at?
Okay, wait.
Oh, I'm
So
seeing that one right there. So you're looking at the year to date. I was
so
looking
you're
at the
looking at
one
the
month.
month. I was looking at the year to
Okay.
date, even on the 3 month, but on the 1 year it's different. So why would it look different like that?
So the in terms of the 3 month, 1 year. So you're gonna see if you look at the 1 month, it's been
Oh, it's because I have to go
raking in
daily.
cash.
I was on cumulative.
Oh, that would explain it. But you're gonna see peaks and valleys on all of these. Um, I would have to imagine the days you're gonna see the big outflows. A lot of that's gonna be institutional. Very rarely are you seeing groups of individual investors all on the same day going and buying or selling one ETF. Obviously, you talk about something like a meme stock, that's different. We don't really have too many of those in the ETF space. But a lot of the big swings you're going to see are institutions moving money in and out of different sectors, different positions. I bet a lot of those are going to be focused right around leading into the end of quarters as people rebalance portfolios and things like that.
Yeah. I think though it's a very telling story here of where the big money decided to go coming off of a massive drawdown in the market. People bought large cap stocks, classic. People bought crypto, they bought gold, right? And then of course you have some bonds in here, some global blended cap.
Do you
Uh,
think we're looking at the same people buying crypto and gold, or do you think that's the two opposite ends of the spectrum? That one group's flocking to crypto as a safe haven, kind of as the new gold, and another group's flocking to gold, or do you think it's people buying both?
I think it's people buying both. I mean, we've talked about it before, the BTGD ETF.
Yep.
We're having David Chikansky on the show later today. This thing last month 52 million in inflows, last 5 days 26 million. This gives you $1 exposure to both Bitcoin and gold. I personally added I moved my portfolio. I had some bonds that didn't really have much purpose for anymore, and I it was like 10% of my portfolio, and I sold that and put 5% into Bitcoin, 5% into gold literally last week, which worked out much better for the gold than the Bitcoin within the past week. But I'm glad I put it into some gold and some pieces there. But yeah, I think people are actually very open to both, to be honest.
I'm inclined to agree. I think those that were very bearish on crypto are kind of coming around in a lot of ways.
Yeah.
And I think that a lot of those bullish crypto investors are kind of realizing that crypto is a very strong use case, and it's been a very strong investment vehicle, but there is still some practicality to owning gold in some way, shape, or form, whether that's physical or through an index or an ETF, that there's still a use case there. So I think it's interesting to kind of see both quote unquote sides of that debate, right? Kind of
Yeah.
come together and realize, oh, maybe there's a use case for both of these things.
Right. I mean, I think there definitely is. And the thesis is the same for both of them, right? The thesis is just don't fight the Fed. The Fed has told us, hey, we're going to keep making money and we're not going to stop, probably ever. And so what happens when more money comes in? Assets inflate, right? And they rise. And you've got a couple of currencies per se, right, that don't have as much inflation and much printing. And Bitcoin, obviously, there's none. I mean, basically, pretty much all the Bitcoin's been mined at this point. And then even within there, you have a million of it in Satoshi's wallet, who my theory is he's either dead or forgot his keys. I don't think that he's alive and just having amazing restraint.
Yeah, you don't think that he's just chosen not to cash out
Yeah.
$100,000 per Bitcoin?
Yeah, I could be the 13th richest person in the world, but you know what? I'm good. I'm good.
It's
I'm living a good life. No, I don't need that.
it's always funny to me when you see people that say like, if I would have bought Bitcoin when I first heard about it in 2010 or 2014, like I would have however many hundreds of millions of dollars. And it's like, yeah, that's if you watched it go from a penny to a
Yeah.
dollar and didn't sell it, and then from a dollar to $100 and didn't sell it, and
Well,
all the fluctuations. And I'm kind of with you. I find it hard to believe someone would just be riding all that out without ever cashing out anything.
yeah.
But who knows?
I think that, to be honest, probably the closest comparison that I can think of right now is Jeff Bezos still owns 9% of Amazon, which is obviously not like a massive amount, but it's worth $200 billion to own 9%.
Yeah.
And that's a lot to still be holding. I mean, and he's sold tons and tons, especially over the past year, but like he still holds almost 10% of a $1.4 trillion company.
I was gonna say it's wild. I think I saw something the other day. I'm 90% sure it was Bezos. It could have been Zuck, but it said that they cashed out something like $400 million worth of stock, and it's
Yeah.
like doesn't even put a dent in what they own, which is just mind-boggling.
Oh yeah. I mean, if you own 200 billion, what's
Yeah,
another 100 or
it's
200
it's
million, right?
it's wild. Yeah,
Yeah, such a small part. So yeah, shout out to founders that have the vision to keep holding. In comparison, to someone like Bezos, like Jensen Huang, who is a top 20 probably richest in the world. He owns 3% of
yep,
Nvidia, right? Like even with only 3%, but it's like the conviction is still holding. I mean, Satoshi, if you're saying that he has a million and divided by 21, right, that would be roughly
just I was gonna
4.7%.
say just under 5. Yeah.
So Jeff Bezos actually has double the amount of percentage wise of the item. So shout out to Bezos, man.
I want to say, what is there today? Like 19.9 million Bitcoins in circulation.
So it's complicated. About 4 million are believed to have been burned or completely lost. Um, Almost all Bitcoin will be completely mined by 2040. And then there's 100 years after that where technically they're still mining, but the rewards are so small
I
that
was
it's
I was gonna
basically all mined
say
by 2040.
I was gonna say I saw something that was like the last like 100,000 bitcoins are gonna take like 1,000 years to mine or something.
No, I think
Absolutely
everything's done
insane.
by 2140.
Um, that's nuts. I'll have to find that thing and send it to you because I
Yeah,
thought it
yeah,
was
send it to me.
interesting.
That's why I think that there's such a bullish thesis for me right now is I'm like, hey, we only have like 14 years pretty much until all the rewards it's pretty much negligible after
Oh,
that. And you
here
hit
you
truth.
here
Yeah.
you go. The year's 2140.
2140. Exactly. Yep.
Yeah.
So
So
that's
not
the
not
year where it's all done.
2040. Okay.
But the
I
last
meant
100 years are negligible. They don't really matter, to be honest. There's just not enough
yeah.
supply coming in.
Like it's only gonna be
Yeah.
a handful.
All
Yeah.
right. I took a little long on that piece. I have to jump here in a second. I have another live stream in 1 minute. But this just time flew by. I love this conversation. It makes me more bullish on the market. Money coming in hot. Ethan, thanks for joining me as always. Any final words here?
No, thanks for having me. Always great to be on here talking markets with you and your followers and investors, and looking forward to joining you next.
Looking forward to it. Thanks everyone who tuned in. Hopefully this was helpful for you. You learned about some new ETFs, figured out the flows in the market, got some confidence, and took away some great takeaways. I'm going to jump on into another live stream in 1 minute. I will see you all there. Take care.